GM everybody, Xin Chao, and welcome everyone to our panel today, which is the topic of institution and digital assets in Southeast Asia. So I think over the past few years, the conversation around digital assets have shifted from is this real to how do we integrate this with our financial system. And in Southeast Asia, that shift is happening faster than what we think. So on our panel today, it's my pleasure to be on the same stage with three powerhouses that powering this institutional digital asset space. So first of all, we have Diederik from Chainalysis, the blockchain intelligence leader in the space. And we also have Matthew from Galaxy Trading, which is one of the premier institutional trading desks. And then we have Ben from HashKey, based in Hong Kong, which is one of the Asia's first fully licensed digital assets exchanges. So over to my panelists today to maybe give us a short introduction about yourself and also what the company do and how do we drive the institutional adoption in the space.
Sure. Hello, everyone. My name is Diederik van Wersch. I am the regional director for ASEAN at Chainalysis. I've been at Chainalysis and the industry in general for about 7 years right now, which is a lifetime in crypto. And at Chainalysis, we are the blockchain analytics firm. So we're able to analyze the blockchain and figure out who's doing what, and we can identify criminal actors that exist on the blockchain. So we work with private sector, assisting them with AML. We work with public sector, assisting them with their investigation. Very happy to be here today.
Yeah, Matthew from the sell side team of Galaxy, based out of Hong Kong. Galaxy is an investment bank that is tailored for institutions. We're one part data AI center operator. So we run a large site where hyperscalers can run their AI factories in West Texas. And then our crypto business, which is really one part markets, one part asset management. And we really touch all parts of the ecosystem in terms of trading. So we're set up for institutions as a trusted venue to get liquidity. And we cover that across spot, lending, borrowing, and options.
Great. I think, I have to speak on the next keynote after this, so I get the headset. But nice to be here at the panel with the rest of the panelists here. Ben from HashKey. I was the first employee at HashKey, which is now a company of about 500 to 600 people, licenses in over 6 countries across four different continents. So it's been really exciting for us as a company to have built something that from day one was regulated and compliant under the assumption that the market would be going towards regulatory compliance long term. So it was not easy being kind of the lone company that was trying that in 2018. But I think recently we've seen with a lot of the regulatory clarity across the world that it's paying dividends for us.
Thank you, gentlemen, for the short and sweet introductions. So I think maybe the words of institutional involvement is not something very unique for us, but maybe we can start with a short introduction. What does it mean by institutional involvement for the benefit of everyone here?
That is a very good question. When I think of institutional involvement, what I'm thinking of is crypto going away from being a niche esoteric asset class as it has been through, let's say, the first decades of its history, to fully entering into the mainstream. That's seeing major financial institutions, whether they be payment processors, central banks, truly trying to adopt and embrace the cryptocurrency industry. And rather than see themselves as adversarial to cryptocurrency, rather see crypto as something that's going to try and harm them, see it as something they can integrate into their own systems. That to me is what true institutional adoption means. And when we're looking now and seeing major financial institutions, whether it be MasterCard, whether it be DBS Bank, whether it be Standard Chartered, adopt cryptocurrency, offer custody services, offer exchange services, offer stablecoin services, or I'm seeing major governments, the United States most saliently, really adopting cryptocurrency or taking a friendly stance towards blockchain. That to me is a real sign that institutional adoption is on its way.
Yeah, I mean, that's pretty much on point. I think from our perspective, we're talking about large financial institutions actually believing in the asset class, whether it's Bitcoin or using stable coins or integrating blockchain into their operations. I think, we saw the other day that Harvard now announced that they have a large Bitcoin holding. I think signs like that, large, slow capital, patient capital, investing in the space and believing in the use case and the future of the technology. I think for us, that's what institutional adoption is.
Yeah, and I think the presentation that was just before this was spot on, which is, once you have regulatory clarity and then once you have licensed companies, it really unlocks a lot of real institutional adoption and use cases. I mean, where we're headquartered in Hong Kong, I mean, we see it on a daily basis. It's been quite interesting, right? Like in 2018, 2019, when Hong Kong first had the digital asset regulatory framework there were not, you didn't have the same level of it. Obviously, you didn't have the same level of adoption then as you do now, right? So what has happened over time is, as you have the regulatory framework, and then as you have licensed companies like HashKey on the asset management side, or also on the exchange side, have like a trusted venue for institutions to come into the market, it really unlocks a lot of interesting things. I think one example that isn't discussed that often, I think globally, is how forward the Hong Kong market is with regards to securities brokers offering, and digital and virtual banks also offering crypto asset trading to their end customers, right? So the brokers, right, security brokers, are also one type of institution, right? The majority of time we talk a lot about the institutions like MicroStrategy as a treasury company, or BlackRock, more on the asset management side, but there's been a huge amount of crypto asset trading in the internet broker apps in Hong Kong, and they're only able to do that by linking up to like the licensed platforms. So it's quite exciting to see different forms of institutional adoption happen because of the underlying regulatory layer.
Thank you. And in your perspective, what exactly is the stage right now for institutional adoption in Southeast Asia markets? And is there any significant difference for different cycles for the past? And can you give us some perspective on that?
Yeah, where are we right now in institutional adoption? It's interesting. I was just chatting to one of my colleagues here. When I joined crypto 7 years ago, when I told people I work in the crypto space, I got funny looks. Like there was a sense that, isn't that crypto thing just used to scam people and buy drugs? But now there's a lot more sense of, there are actual real legitimate use cases for cryptocurrency. It's not the asset class that's viewed with the same level of skepticism that it was in the past. As to where we are, I wouldn't be able to give the stage a specific name, but we are definitely at a point where there's an acceptance from mainstream institutions that cryptocurrency is here to stay. They are better off trying to adopt and work with it rather than fight against it. I know as well at Chainalysis, we work extensively with public sector as well. I know it's a private sector focused panel, but to just give you that angle, there was a sense in the past that from public sector, whether it be regulators, law enforcement, that this crypto thing, they were just kind of hoping it would go away, they could ignore it, and eventually it would be out of sight and out of mind. Now there's a growing acceptance that, hey, crypto's here to stay. Our citizenry, they are adopting it, they are using it, whether we want them to or not. We just know more about that. One thing I think I see a lot in Asia in terms of adoption versus the rest of the world, we at Chainalysis every single year, we have a report where we look at grassroots level adoption across the world. And what I find fascinating in Asia is the way that there's adoption at all levels of the society. So we see grassroots level adoption. That could be things like DeFi games. Axie Infinity was obviously huge here. It was huge in the Philippines as well. We're seeing use cases for people using crypto as a hedge against inflation. We're getting people using cryptocurrencies to conduct remittances. But then at the upper level, we're also seeing major institutions adopt crypto. I already mentioned DBS Bank in Singapore. We're seeing Standard Chartered adopt it. We're seeing stablecoin issuers becoming increasingly prominent in places like Hong Kong. So what I find fascinating about crypto adoption in ASEAN, in Southeast Asia, perhaps more than any other place in the world I can think of, is that it's an adoption that seems to be encompassing all aspects of the society rather than just at the top level of that institutional adoption, which is what we see in some other regions.
Yeah, for me in the lead up to this, I've been at Galaxy for nearly 7 years, and I remember in the early days when Facebook tried to launch Libra, and with Steve Kelso hired me at Galaxy. We were watching the video in small London office, and the one thing he said to me afterwards, "What did you notice in that video?" And it was emerging markets, So there was a video a promotional video, and it was all about emerging markets. And nearly 7 years on, I think what we've seen is the explosion of stable coins, and I think this part of the world has benefited greatly from that. Whether it's reducing costs, avoiding the banking system, or just being able to find security in a more stable asset. I think that for me probably is where we've really seen adoption. So the institutions, I think, who really bought into it here are obviously the payments companies and trying to increase it. And then maybe some of the wealth management companies. If I think of trips to Singapore, there's probably some of the wealth management platforms trying to integrate structured products, or trying to appeal to the folks that have benefited from crypto appreciation in their portfolios. And then lastly, what's different in this cycle? Well, I think we're talking about a strategic reserve in the US and regulatory clarity. I mean, that's been the game changer, I think.
Yeah, I think there's a lot of exciting things happening in Southeast Asia. I think there's a few examples I can give. I mean, I think that the general use cases around RWA tokenization and payments, and I think it's really exciting to see. I think similar to the other panelists here, right? When you're in the industry for 7 to 8 years, like in year one, there's a lot of promise, right? It's like, oh, the technology can do this, and I remember back in those days, it was always around, there's so much pain points in cross-border payments, right? That has been like one of the big like pain point problem statements that blockchain is supposed to address from day one, right? But we haven't really gotten there yet, but it seems like we're on the cusp of it. And in Southeast Asia, I mean, this is now public. HashKey has a collaboration. So it's interesting. So HashKey has this licensed exchange in Hong Kong, and then across Southeast Asia, what we see obviously is you have a lot of local licensed exchanges, right? And each of the local licensed exchanges in different countries, they are the ones that obviously have the most stable like fiat on and off ramp. So recently we've done a partnership with CoinsPH in the Philippines, where we see, for the remittance corridor, we see demand for consumers having accounts on both exchanges in order to be able to do on ramp in one jurisdiction and off ramp in another jurisdiction, right? So I think for certain use cases in Southeast Asia, I mean, the no-brainer is definitely around remittances, but I think the question is like, how do you actually implement that, and where are people actually going to on and off ramp? And I think traditionally historically, some of the normally used like fiat on and off ramp channels have been through the third-party payment processors who can do kind of the local currency payouts. But I think as you start to see more and more like local licensed exchanges, you get more opportunity for consumers to have what I would call like native off ramp rather than have to go through third parties. So I think these remittance corridors for stablecoins are going to be incredibly important. And then we've also seen a lot of experimentation around RWA tokenization in some of the international financial centers of Southeast Asia. Hong Kong is one example, right? Right now in HashKey's exchange app in Hong Kong, you can actually directly subscribe to a tokenized money market ETF from within the crypto exchange app, which is quite interesting, right? And I think you're going to start to see more and more of these types of tokenized financial product integrations with the licensed crypto platforms.
Thank you. And I think interesting that stablecoins are being mentioned as of you. The fast growing topic, which is recently everyone is talking about. Ben, you recently shared with CNBC that stablecoins could replace SHIFT for cross-border transactions. Is this a wild dream, or is there a need for more regionalized adoptions? So as Malaysia, Indonesia, and Thailand are already talking about seamless trade, is there still a need for stablecoins in your perspective?
Yeah, it's interesting you pulled out that quote, right? That was a kind of a bold claim. I mean, I think if you look at like digital, again, I think no one on the stage is really a digital like payments expert, right? But when you're in blockchain, you kind of see how money flows and you see how things work, right? I think for Swift specifically, it's obviously US dollar rail transfers, and the majority of stablecoin rails are obviously all US dollar. So I think it's only natural that over time, you look at, there was a really good report, I think in March or April this year from, I think it was from Artemis, who did a really detailed report on like the state of B2B stablecoin payments. So there's a huge like uptrend in the usage of stablecoins for B2B payments, and it makes sense, right, for real-time settlement, and then also for for less costs and things like this. And I think where we've seen some interesting demand is sometimes in terms of the import-export businesses. You have buyers from certain countries, right, emerging markets, who might be buying from sellers in another emerging market, right? And if the sale of that good is in US dollar, the actual transfer from the buyer to the seller is actually quite complicated, right? So obviously we've seen a huge amount of traffic and transfers in USDT, for example, to facilitate that type of flow, right? So as if you look at the numbers, right, and you assume that stablecoin market cap is going to continue to increase and increase and increase, then it's only natural that you might have some competition between the kind of the traditional payment rails and the traditional cross-border payment rails and some of the newer stablecoin side. So I think it's pretty exciting space to watch.
Thank you, Ben. And I think institutions face a dynamic regulatory landscape across Southeast Asia. So some markets like Singapore are relatively clear but have started tightening. And others like Vietnam, Malaysia, Philippines, and Indonesia are still figuring out. So in Diederik's perspective, how are institutions navigating this lack of consistency across the region? And how are they finding ways to move forward despite regulatory uncertainty in the space?
Yeah, I mean, it's a very valid question. I will say that I moved from the EMEA region, the European region, to APAC, and I still say that I feel there's a much more broad, wide, dynamic crypto sector here, in large due to the clarity of the regulations and the dynamic nature of the crypto space that exists in Asia relative to other parts of the world. I think what most institutions are now trying to do is they're simply trying to identify the key use cases that are going to be valid in the coming years, simply to try and develop as much as possible, identify the key regions where they can operate with. One thing we find here in APAC is that this is one of the most dominant regions when it comes to cryptocurrency adoption, and I don't necessarily see that changing anytime soon.
Yeah. How about Matthew?
Yeah, I mean, I just think depending on the institution, obviously payments companies probably see the opportunity a little clearer than maybe some of the investing institutions. But ultimately, regulatory clarity, security, we talk about it all the time, but they're important, right? I mentioned Harvard earlier, those endowments, we've been having those conversations for as long as I've been at Galaxy. That's why we set up the asset management business. But ultimately, the ETF and regulatory clarity from the administration, has seen these guys actually pull the trigger and make investments in crypto. So, yeah, I think just depending on the institution, if you're more sensitive to regulatory clarity, it's just going to withhold them doing anything in the space.
Thank you, Matthew. So I think each of you working with institution in a different way. So whether it's from infrastructures or trading or from the compliance standpoint, from your perspective, what do you think is still missing in Southeast Asia to truly unlock the next phase of institutional adoption, especially when compared to more developed markets like US or Hong Kong framework? Maybe benefits?
No, it's a good question. What are still some of the gaps? I think there, from our perspective as a company that operates like a licensed exchange, I think there's been a lot that I think Hong Kong has done to ensure that like local users in that city are only able to use like the licensed exchanges and are not subject to the risk of using the offshore exchanges. So I think one thing to maybe one potential gap in Southeast Asia that I think might be addressed over time is just maybe regulators and governments focusing a little bit more on ensuring that the users like local to each country are not able to use kind of the more risky like offshore exchanges, because I mean there's been a lot of examples of that. I mean in Hong Kong specifically, there was a few cases where people were subject to fraud using some of these exchanges. So Anyway, I think in terms of the gaps, I think maybe some enforcement around like the governments and regulators, so that kind of the local ecosystems in each country are a little bit more kind of robust.
Thank you. And Diederik, what kind of regulation framework is more favorable for institutional perspective?
I mean, in terms of what's more favorable, when I speak to different financial institutions, what I find they look more than necessarily than just favorability is just stability. They want to know that, hey, in 5 years, can I trust that the regulation is still going to be friendly? Is this a place that I can set up shop? So I think what they want is to have a bit of a more mid to long-term view. I think they welcome regulation. Most institutions I speak, they just want to know a little bit more what those regulations are going to be. And I think what we do at Chainalysis a lot is that we do a lot of work and education with the regulators. And one thing we try and educate them on is the fact that the blockchain is actually an incredibly powerful tool to fight money laundering. There's actually nowhere where criminals are less safe than on the blockchain, because every transaction is public. Every transaction is visible for the world to see. Right now, we're working with stablecoin issuers, and when they launch a token, we have solutions that can tell them everything that's going on with their token in the wild, who's interacting with their token, which criminal actors are interacting with it. Now, that's an incredibly powerful aspect of blockchain technology. And to bring it back to your question, the regulations that are the most favorable are the ones that are going to embrace that aspect of blockchain, to use the inherent open nature of the blockchain, the inherent danger that exists to criminals in the blockchain because all their transactions are public, and build regulations around that. And that's one thing we're trying to tell regulators when we speak to them and institutions, that, look, you don't need to be scared of crypto. Far from it. If you want to catch criminals, if you want an asset class where criminals can operate with very little obfuscation, then crypto is the asset class you should be choosing. So regulators need to build regulation that embraces the open nature of the blockchain and actually can help mitigate the criminal aspect that might exist in this space.
Matthew, what do you think? What is the gap that Southeast Asia currently have?
I think probably just harmonious regulation and agreement among the regulators so that they can all operate together. I think, every regulator is probably worried with the emergence of stable coins that are being dollar denominated, that maybe, their currency is under threat. So I think, closing the ecosystem, maybe creating more of a trading environment or an access environment within their own country and stopping it going offshore.
Thank you so much. And I think looking ahead, what do you think the future of digital assets in Southeast Asia will look like in the next 5 years? And what is the most exciting way you see your platform contributing to that future or to that journey?
Yeah, so I think what's really exciting in Asia, I mentioned this already, that we release a report every single year that looks at adoption across different countries, right? Now, Asia features prominently in that list, but it's not exactly the countries that you would expect. Indonesia, number 3 in terms of global adoption. Vietnam, number 5 in terms of global adoption. You have Cambodia on that list. You have Thailand on that list. I mean, countries like Cambodia, that's not the country I would think of necessarily when it comes to cryptocurrency adoption. Now, one of the dreams of Satoshi when he launched the Bitcoin white paper was this concept of banking the unbanked. To give people that came from the developing world that may not have had access to the financial institutions you'd find in the first world, to give them access to the financial space. And in part, we're seeing that dream realized because developing nations are adopting crypto more and more. They're adopting it from use cases, as I mentioned, related from gaming to a hedge against inflation, to remittance payments, to a way to escape from the volatility that might exist in their own currencies. And when you ask about the future of it, I think what I'm really excited to see is, yes, I expect to see countries like Singapore and Hong Kong and to an extent China still dominate in terms of adoption. But what I'm really excited to see is how this is going to impact the developing markets that we're seeing, places like Vietnam, places like Indonesia, how they are going to grow in prominence, how they are going to continue to adopt this cryptocurrency. And I think we could see in Asia, because there's such a variety of different markets, we could see it becoming the foremost region in the world, led by the more developed, let's say, institutional backed countries like Singapore or Hong Kong, all the way down to the countries where we see more grassroots level adoption for those different use cases I just mentioned. So it's a very exciting time to be in Asia in crypto.
Yeah, I think from our perspective, we'd love to see some more of the the larger institutions, the pensions, um, uh, the asset managers based throughout Asia start to embrace the ecosystem a little bit more and make larger investments into things like Bitcoin, Ethereum, Solana. Really believe in the ecosystems. In addition to say stuff happening at the grassroots level, and yeah, I guess that's really it. That's where we're ultimately set up to provide a service. So we love to see people in Vietnam or Thailand really start to embrace the investment side of this.
I still think we're quite early in seeing what this industry can do, right? I think even if you look at RWA tokenization, right, stablecoins, this was something maybe like 4 years ago, right? People were like, oh, tokenization, you could do all these things, and then 3 or 4 years later, it starts to actually come to fruition. Stablecoins are one I would argue is one type of RWA, right? But if you think back, I still think there's like so much more in DeFi and like decentralized businesses and like the Web3 businesses that really haven't accelerated into mass adoption yet. And I think one of my opinion on that is I think one of the barriers to date has just been like kind of the lack of really reliable fiat on and off ramps where companies that are, let's say, funding in tokens, or they're trying to manage their treasury of tokens, like having them be able to have confidence in a reliable way to go back into the fiat system. And then also similar for like retail users, right? Making sure that there's easy ways to go back and forth between like Web3 and, fiat world, right? So I think there's, over 5 years, I think there's going to be a lot of I still think there's a lot of excitement to be seen around DeFi. And also if you look at like kind of like the last, what's interesting in crypto is like each bull cycle, right? It's like there's people get so excited by the promise of the technology and all these different use cases, but sometimes it's too early, right? So if you look back to like 2021, I mean, just like 2 cycles, right? You look back to 2021, kind of like, DeFi plus NFTs. Now you're kind of starting to really see really cool high performance dexes. And I still think we haven't really reached the pinnacle of what you could see around like business models that have like NFTs integrated in interesting ways. I still think we're quite early on that. I think also there's something, if you look back to like 2017, 2018, right? And that was like, kind of the ICO boom, right? There's all this like promise and excitement around, there's these like decentralized businesses, decentralized, infrastructures and all these different things. So I think a lot of those businesses haven't really like scaled up and really reached mass adoption yet. But I think within, as you start to have the payments layer, right? As you start to have like the stablecoin payments layer become institutionalized, I think it helps reduce some of the barriers to those businesses in the future. So I think there's still a lot of excitement around some of the decentralized businesses and Web3 apps.
Thank you for the answers. And I think maybe some of you don't know what Southeast Asia has achieved this far. So maybe some of the statistics or some facts for everyone to understand. So I think Singapore is leading this like institutional adoption in Southeast Asia with licensing and groundbreaking pilots like Project Guardian. And then Thailand is tokenizing real estate and infrastructures. Indonesia has launched a national crypto house, crypto house, and in Philippines, major banks are already offering custody and blockchain-based payments. And in Malaysia, regulators are laying the groundwork for tokenization and Web3 innovation under Malaysia Madani program. But I think there are still things that are lacking in these countries. And I would love to hear from the panelists your perspective on what are the interesting examples or any framework or any specific innovations that this Southeast Asia country can actually adopt from other countries. Is there anything in specific that you guys can bring up as an example for case studies?
Well, I think maybe I'll start. I'll give you guys some time to think.
She stumped us.
Yeah. No, I think some interesting. I think some interesting frameworks that can be points of reference in Southeast Asia. Again, I go back to Hong Kong a little bit because it's just where we're headquartered and where I've seen a lot of things. Is I think, you have a regulatory framework that comes out, but then the government, in Hong Kong comes out, I think like 2022 or something like that, saying that they wanted to really establish like a Web3 hub. And I think for any country, right, if it really wants to develop a, hub for Web3 or a hub for blockchain, it's really important that, the government's not out there like building all the applications, right? But it is important for builders to see that, at least at the, at the national level, the government level, that there's support for a particular industry, right? So I think what we've seen here in Vietnam over the past few months, at least this year, is quite exciting, right? In terms of things like, adding blockchain to like, the national strategic, technologies. And I think that's definitely the right approach. But I think, for any country that's really interested in kind of building itself as a hub of Web3, either from like developers or institutional adoption, it is really important that the government kind of come out and say, hey, we want to do this. We are supportive of this industry. No worries. So I think that's something that has worked in Hong Kong, because we've seen a lot, like, because it's important, we don't operate in a vacuum, right? So like the large corporates, the banks, they pay attention to, what the government is saying, right? So if you want to get larger corporates on board, if you want to get banks on board, it's important to hear at the highest levels that there's support. That doesn't mean it's necessarily going to be the corporates who are like building each app that's successful, but the corporates might be, through their venture arm, funding like a smaller startup that's working on it, right? And that capital might be locked. That capital might be unlocked by that corporate just hearing that the government is in support of a particular industry, right? So I think those are some things that I think have worked and could be transferable to other countries in Southeast Asia.
I would say, in addition to that, though, it's important that your institutions and your infrastructure are also aligned with the government direction, because so it was around 22, the Hong Kong started to come out in favor of crypto, but the banks, the infrastructure in Hong Kong was not welcoming to the crypto companies coming and set up. So, for instance, I can tell you that Galaxy had very hard time getting a bank account in Hong Kong, and ultimately it was a large bank in Singapore that banked us, because their Hong Kong branch we were having no progress with. So I think it's important that the infrastructure on the ground is aligned, and that it's not just the government also coming out and saying, yeah, we want to bring everybody here, but if you can't move if you can't set up on the ground, whether that's getting a bank account or something similar, then that creates barriers to setting up in the country too.
Yeah, we saw an interesting initiative in Singapore a couple of years back called Project Guardian, where the MAS, the local regulator, actually worked with financial institutions to discuss how they could better integrate cryptocurrency across the industry in Singapore. And what I really like about this initiative is we have this constant sense that the regulator and then the market should be at odds of each other. But here we saw a synergy between the two, where yes, we do need a regulator to set the playing rules, but the regulator should also be aware of what's going on in the game. So what I liked about this approach was that in Singapore, you saw that the private sector, the market, the companies were in the same room as the regulator, helping to best figure out how they can approach this issue of cryptocurrency regulation across the country. And I think that's one thing that I think other regulators could learn from, is that work with your market, understand more about the technology, understand more about the industry. Now, we at Chainalysis often sit as a bit of an intermediary there, where we're also explaining to the regulators, hey, this is actually how cryptocurrency works. This is, from a compliance investigatory solution, what's available in the market. This is how you should be thinking about regulation. And we're even seeing now cases of regulators that are hiring people, blockchain experts, who are coming from the actual cryptocurrency industry, to make sure that they have in-house experts and fully understand what it is that they're regulating. So I think that's a model that other countries in this region can emulate.
Thank you so much, gentlemen, for the insightful discussion today. So I think that's almost the end of our panel today, and I would love to also give myself introductions. So it's Noelle here, the co-founder of Lydian Labs and also the organizer of Malaysia Blockchain Week. So I think kudos for all the organizers across Southeast Asia, not only on hosting conference itself, but I think leading on a lot of industry conversation between regulators with the industry players, like what Diederik mentioned earlier, where regulators should listen to the market players to understand better about the market, and looking forward for the next 5 years on what can be unfold in the Southeast Asia. Thank you everyone for having us today and be here with us today. Thank Thank you.
Thank you.